I always was of the opinion, even though Trump was arguing in favor of a soft dollar, the policies that he was proposing and promoting on the trail were not soft dollar policies, which is why after the election we saw DXY break 110. I think the surprise, as you said, that the tariffs will be delayed and there's going to be a period of study and that sort of stuff, obviously took a lot of the steam out of the dollar appreciation, and some of those currencies that were beaten down have appreciated. I mean, it's fairly straightforward analysis at this point. The trick is what's going to happen next, and we still don't know. I mean, it's been, over 2 months since the election, and we had the inauguration overnight, and this sort of wishy-washy middle ground of trying to study trade policy and things like that through executive order is interesting, and I think was a relief to dollar bears.
Jens, if I can get to you, yields may have stabilised, but it's very clear that the bond vigilantes are watching for any sign of fiscal recklessness. Is there still a likelihood that the 10-year yield retests 5%, if not higher?
We can see that since the election, right, we've had some pressure higher in yields, and then we've had certain kind of pieces of news that were relevant to the fiscal outlook. One of it was when Scott Bessent was nominated to be Treasury Secretary. The bond market liked that. Yields came down like 15 basis points very quickly. I think that just tells you that some kind of anchor on the fiscal trajectory is really important, right? We need to have some kind of confirmation that we are going to go down from 6% of GDP deficits, right? If we don't have that confirmation, if we're just going to get tax cuts without any funding, the bond market's going to be in real trouble.
So here's the thing, right? I mean, I hate to say it, but I'd hate to be Scott Bessent, not that I could actually even come close to doing his job, right? But he's in a pretty difficult position, right? The whole 3-3 target, 3-3-3 target we've talked about, right? Because when I think about it, even X, net of what Trump may or may not do in terms of tariffs, how aggressive he may or may not be, right? Just with the deficit where it is right now, right? Treasury issuance is at a record high already, right? Yeah. John, and weigh in on this. And it basically means that we're very dependent, right, on the indirect bid on China.
That's right.
On Japan. That bid has been fading.
Correct.
Right? And we've seen, especially in the last 12 months or so, China goes, look, recycle my surplus in treasuries. I don't know. I prefer to buy gold. How much is that going to hurt?
Well,
keep yields up on
yeah, one thing that we have at BNY is a data program that looks at all our custody holdings, and we can see flows around the world. And one we've seen since the beginning of December, a complete lack, not just a lack, but actual selling by cross-border investors of U.S. long-duration bonds. Really? And, maybe 5%, if yields get to that point, that would be cheap enough to induce buying. We've seen that in the past when yields have threatened 5% since the pandemic. But without that sort of, and this is real money that we look at, it's not official institutions. With that sort of lack of demand so far, again, if yields go up, to Jens's point, they may be cheap enough to induce buying. We've seen that, as I've mentioned in the past. There's a real supply and demand imbalance. And if Bessent wants to, as he's mentioned before became a public designee, if he wants to term out the debt to longer maturities, that's just going to increase coupon issuance and create even more supply and demand imbalances. So I'm entirely on board with that.
And Jens, I mean, you've known Bessent for a long time, right? In fact, he was one of your first clients at Exante. And this is the thing what John was talking about, right? What Bessent needs to do, one of his greatest challenges is going to be, right now, at the short end, the U.S. government is just paying way too much, right, for debt. He's got to push supply to the right-hand side of the curve. And that is only going to steepen the curve further, is it not?
Yeah, so it's even more complicated than what you've outlined in the sense that because we also have the Fed selling bonds, right? So we have the massive issuance from the deficit side, right? And we have the Fed selling bonds, right? So what the private sector needs to absorb is enormous. And as you said, China is not buying much. Japan is getting more cautious because they have higher yields domestically. So there's a huge amount of pressure on domestic U.S. investors to absorb this issuance, right? So any signal on fiscal policy is crucial to the confidence being there or not being there. And I think looking a little bit ahead, we might also get into a situation where we'll have to think about where the Fed is going to massage their QT policy, right? Is there going to be a point where the yield curve is so vulnerable that they will have to sort of tweak that arrangement? That's something to watch on the calendar.
You see that happening, John?
Less so. I think actually QT's days will be numbered once the debt ceiling is resolved, and the TGA drawdown, which will increase reserves during the debt ceiling period, once that gets eliminated or postponed, TGA rises, reserves come down, we may find ourselves much more scarce, or as the Fed would say, from abundant to ample reserves, and then QT might have to end because that's the point where they think that changes in reserves have outsized impacts on the federal funds rate.
Are you worried about Tuesday, what Janet Yellen was warning about?
I think they have a kind of gray zone period, right, where it's not like a hard stop. So I think we need to have the budget process is starting now. And the tariffs is also a part of the budget process, right? Immigration is perhaps the top priority of the administration. The second priority is to make sure that the tax cuts that were implemented in 2017 gets extended, right? And over a 10-year period, it costs $4 trillion, right? So they have to fund that somehow, right? And whatever revenue they can get on the tariff side will be very helpful in that regard. And if they don't have the tariff revenue, they're going to have to find it somewhere else. So there's pressure on the tariffs from multiple fronts, including from a budget perspective, as Scott Bessent also said in the nomination
Sean, I'm curious how hard Trump is going to actually have to go on tariffs to make it up, right, to pay for those tax cuts, simply because, you know, yes, Republicans have control of both houses of Congress. The majorities are slim. We're already seeing pushback, right? At the end of the day, we may not go from 21 to 15. If we're lucky, we might get sort of compromised in the middle somewhere, 17, 18%, right? Which
on corporates, you mean?
Yeah,
corporate tax.
Yes. What do you think?
Well, I think to Jens's point, the tariffs won't raise or in my estimation, $5 trillion in revenue to offset the tax extension. And I don't think DOGE will be able to cut more than $1 trillion over 10 years. So there is going to be a gap, and everything that we talked about earlier comes to fore. I think the immigration policy is underestimated in terms of its economic impact, both on the real economy and the financial economy, because it will be inflationary. It depends how aggressive, how many immigrants get deported. We've seen numbers, if it gets up to the 7-8 millions, it's a 3% inflation hit, for example. Yeah. It's stagflationary. Output will come down because there's less labor working. Wages will go up, fueling inflation. Puts the Fed in a very difficult spot.